how many stocks should I have in my portfolio?
I think that number for a retail investor should not be more than... Government has launched 50 Vande Bharat. They want to make it 900 by 2029. All you got to do is figure out who makes the Vande Bharat and metro coaches. There's a company called and there's a company called they make the coaches. You map it, you'll get your idea. Only thing is,
What sort of extra insights that a Warren Buffett have, which a retail investor or a normal investor cannot get?
the big guys, you name Warren Buffett, you name Rakesh Jhunjhunwala, the guys who make 20% are the ones, it decides what you do in a crisis. You know, one of my very seasoned clients told me once, like, Gurmeet, if you want to become rich slowly, it will take 15 years. If you're in a hurry, it will take 30. Titan has a bigger SIP book than HDFC Top 100 Fund.
What are you saying?
So it's called, you start an SIP in Tanishq, okay, let's say 5,000 rupees a month. You pay 55,000. On the 12th month, you can buy a jewelry worth 60,000.
Now, as a retail investor, when is the right time for me to start picking individual stocks by myself?
So one is,
Recently, SEBI came out with this report that 93% of FNO traders, people who are, buying and selling stocks on a daily basis, 93% of them have lost money over the last 3 years. And on an average, this 93% is about 1 crore people, by the way. And on an average, they have lost 2 lakhs on an average.
Yeah.
The top 4% of the loss makers have lost an average of 25 lakhs. The top 1% of the traders, you might be thinking they're making a lot of money, these top 1% individual traders, but they are also making just like 1 lakh profit. So my question is, who is exactly making money in the stock market by trading? Right? It feels like this giant casino where the house is making all the money and the common man, the common middle class people is just losing money. So what are your thoughts on this?
so your 1% club reflects that your reality. Only 1% traders actually make money. And these are high frequency traders. They use AI, they use machine learning. They will put 500 trades at one go, thousands of trades at one go.
Okay.
As a retail investor, you're looking at the chart, thinking of, whether I should buy an option, sell an option. And the other thing is that, you can't compete against them. Even their track record is like 50%. The high frequency traders, the big hedge funds, you would have seen so many news of them folding up, going long on China 2 years back and not on India. So it's a very difficult trade. And one key trait here is risk management. They are risk managers.
Okay.
A retail investor is a return manager.
Okay.
So because they manage risk, they trade with stop losses, they hedge themselves completely. It's a very sophisticated trade. And as you rightly said, Sharan, it's a casino. The house wins. So I would urge only if you have the skills, risk-taking techniques, the necessary software, the right algos, only then get into this. Otherwise,
So basically people who are going 9 to 5 should not even try getting into FNO.
you're giving them a perfect, you're a perfect slaughter for these high frequency traders, and it can create a systemic risk,
Right.
which is where SEBI is very, very worried. Look at, for example, in US, the FNO market is 65%. The balance is cash. India is 99%.
What are you saying?
Yeah. So our FNO market is twice, in fact, 2.5 times of US. So, everybody wants to get rich quickly. And
Like these days, I'm seeing reels of this auto rickshaw driver who is making a reel about getting up in the morning, going in the auto, seeing the trading chart and, trading.
Yeah.
And recently I was also in Mangalore. I had gone to get my mom an Apple Watch.
Yeah.
And there's this guy who is the guy who explains about the products. And he recognizes me. He's like, I learned a lot from you. You changed my life and all of that. I asked him, okay, did you start investing? He's like, no. Then how did I change your life? He's like, you taught me how to not lose money.
Yeah.
Right? He
So
was
important.
trading, right? This guy who was, working as a store executive to explain the products. He is doing trading and he was like, he has lost lakhs of rupees.
Yeah.
So it has sort of become like this drug, right?
Absolutely.
Like this, like people say betting apps are illegal, you should not bet and all of that. So I feel like trading has slowly started becoming like that. Right? It has slowly started becoming a way where wealth is being transferred from the have-nots to the haves.
Oh, absolutely. Look at, for example, we have 3 crore people, unique people who do SIPs. We have 17 crore people on Dream 11.
Okay.
Right?
Okay.
Where you're every day betting 100, 200. So, it's this urge of making quick money.
Wait. 3 crore people are doing mutual fund SIPs.
Yeah.
17 crore people on Dream 11 doing this betting.
Yeah. And about 10 crore people playing online rummy, poker. So
Damn.
this tells you about our psyche, that we want quick results. One of my very seasoned clients told me once, Gurmeet, if you want to become rich slowly, it will take 15 years. If you're in a hurry, it will take 30.
Okay.
So, and the sooner you learn it,
Right.
that wealth will come slowly, the better.
Absolutely. So Gurmeet, I have a very interesting question. So obviously, the current generation is consuming alcohol at a much more rate than the previous generation, I would say. We are starting at a much younger age as well. We're not that afraid anymore. The culture is changing. So by that logic, I would assume that, because alcohol consumption is increasing, the companies which make alcohol should benefit from it. So is it a good idea to identify companies which make alcohol and, make some good money on it as well? Because people say, don't buy an iPhone, buy the Apple stock.
Yeah.
So should I not buy the Johnny Walker and invest in the company which makes the Johnny Walker Black Label?
Good one. So see, there's one risk here between a normal consumption company and sin stock. I call them sin stocks because these are considered sins.
Like cigarettes and
cigarettes,
drinking.
alcohol, gambling. These are sin stocks.
Yeah.
Right? One risk is then the pricing gets controlled by the government.
Okay.
So iPhone price will not be decided by the government of India or US. It will be Apple. But a cigarette, every budget you can have an increase in excise duty. These are very heavily taxed. So for example, a cigarette 70% probably will be taxed. Right? Similarly, in alcohol, there will be heavy taxes because these are not part of the GST. These
Correct.
are states' purview. Second, a state may decide for political reason to impose ban
on the alcohol.
on a pan masala. So Gujarat has a ban on liquor. Bihar has a ban on liquor. MP is saying I will not issue more fresh thekas and licenses. So the government can intervene. And anywhere where the government can intervene with the pricing, you can have a bit of a setback. But I agree with you in terms of potential.
Yeah.
Even in Gujarat, you get liquor. It's not that you don't get it, right? So there is potential. You got to pick the right ones, right? So for example, India is largely a whiskey drinking nation. We consume more whiskey than vodka or other, right? So, and now what is happening is people are migrating again from the lower end, which we call as popular brands, to prestige brands.
Where premiumization
The
is happening
blended
in alcohol
scotch,
also.
right? So there the margins are higher. Good thing is now we have Indian makers who are now making their presence felt.
Yeah.
So there is Indri, which is made by a company called Piccadilly. Then you have a Rampur, which is again an Indian brand. United Spirits obviously is world known. You have Diageo, which is Black Label and all series. You have a Radico Khaitan, which makes listed company which makes IML. ITC is there, VST is there in cigarettes, right? But you always have to be ready for a risk where even if you
regulatory risk.
Regulatory risk. So that's one. That is why these stocks will never be at a very high premium. An HUL or a Tata Consumer will trade at 60-70 PE.
Yeah.
But an ITC will only trade at 20-25 times because there's always a sword.
But there's regulation in financial services sector also, right? So how is the regulation in this in
But
production
regulator
different?
doesn't say you can't make a home loan at 9%. Now you're free to decide your home loan rate.
Got
You're
it.
free to decide that I have a bank who can give me a personal loan at 12%. He can give another personal loan at 20% because he will price the risk.
Right.
In here, your pricing is not in your control and your consumption is not in your control.
Got it.
And the other thing you have to be here careful about is, market discounts futures. Why does a market give you a 50 multiple? Because market thinks that year on year you will keep doing the same thing. Here you can't do that beyond a point. You don't know 3 years later what
are the regulations change?
So the PE multiples. So they will
usually
never be
low.
wealth creators. They can make money
Very
for you,
interesting.
but they will not be multi-baggers in the long run.
They'll never be like extremely... they'll never grow at a very extreme fast rate because there's always that inherent intrinsic fear that the government can anytime come
pricing
and
is controlled. Similarly, look at petrol and diesel marketing companies. The price is decided by the company.
The government, yeah.
The OMCs never, you will find a BPCL, HPCL delivering great returns, right?
Correct.
So it will keep moving up and down. But I agree that, if these stocks are down and you suddenly have a ban and you see the stocks falling, eventually it comes back. So good time to buy them is when there is a negative news around them.
Interesting.
Do you remember Nestle had a ban on Maggi because it had lead?
Yeah,
The stock went down to 6,000.
From?
17,000.
Okay.
I think it's back at 27, 28,000.
And now Maggi is back and up.
Yeah. So good time to buy them is when there is bad news around them.
Very interesting. Now tell me, as a retail investor, firstly I want to know, when is the right time for me to start picking individual stocks by myself, right? Because a retail investor is not investing in stocks full time, right? They have a full-time job as well, right? They are, 9 to 7, they are in the office. They are, getting their hard-earned salary. And now they're thinking, should I invest this in mutual funds or should I learn how to pick individual stocks and become the next Rakesh Jhunjhunwala, right? So how to make that decision?
I think do both.
Okay.
Discipline can never, replace stock picking and intelligence. In the
Okay.
long run, discipline will make you more money. So you should have a monthly discipline that, an X amount of my money should go into the
So
markets.
let's say I am making 50,000 rupees per month,
Yeah.
right? And I am able to save 30,000 rupees. 20,000 is rent and expenses. 30,000 rupees I'm saving.
Yeah.
So this 30,000 rupees, now I'm deciding between stocks and mutual funds.
Yeah.
How do I proceed?
So if you are really busy, it's extremely hectic. You hardly get the time to research, see balance sheets, hair management calls. You are owning a business. If you're a shareholder, you are the owner of the business. The owner of the business has to be involved in the business. You can't say, I'll buy the share and I'll forget. It doesn't work like that. In today's world, any company can go wrong.
Right.
Who would have thought Vodafone will go bankrupt
Correct.
5 years back?
Yeah.
Who would have thought Yes Bank will go bankrupt?
Right. Yeah,
Right?
very
So,
surprising.
Right.
Yeah.
So, the big guys can fail, right? And Kingfisher, right? I can go on. Every year you have a bankruptcy which you never thought could happen, right? Anil Ambani went bust.
Yeah.
Look at the difference between the two siblings, right?
Correct.
So you have to give time to stocks. By time, I mean, get involved, see the business updates. So if there's no time, then I think 100% mutual fund is the right way to do it. Give it to a professional. Get a discipline in place. But if you are fond of it, you want to make extra wealth, you can maybe devote 1 hour every day or maybe a couple of hours a week.
Okay.
Right? Do commonsensical stuff. Right? I'll give you an example. Now, most of us fly Indigo. Right? It's 64% market share. Okay. Now, you would have noticed every time Indigo is on time, it tries to reach 10-15 minutes earlier. So the Delhi Bombay Vistara will take 2 hours 10 minutes. Indigo will do that in 150.
Correct.
Right? And they're also very quick to deboard the plane.
Right.
So every flight they try and save 15-20 minutes. So there is a Harvard study. 10 minutes saved on every flight is 200 more flights in a year.
Wow. Really?
Yeah.
10 minutes saved on every flight is 200 extra flights.
It's 200 extra flights in a year.
Wow.
And that is why Indigo is the only profitable airline in the country. Second, you would have noticed they don't serve you any hot food anymore. Your sandwiches are very cold.
Yeah.
You don't like it, right?
Yeah.
So they fly ovenless.
Okay.
It's the only airline which flies ovenless. You can just observe this. You don't have to be an analyst to do that.
Yeah.
Which means there are basically 3 ovens in a flight. And each oven is about, let's say, 20 kg. So it is 60 kg of weight saved, that translate to about 400, 2,000, 3,000 rupees of fuel saved.
Okay.
7 lakh flights in a year.
That's how many Indigo does in a year?
Yeah.
7 lakh.
Yeah. That's 400 crores.
Wow. Damn.
Yeah. So they have mastered the art of cost efficiency.
So the simple act of not serving hot food in a plane
ovenless. They go ovenless.
is saving 400 crores.
A year.
Damn.
No male member in the crew. The males are heavier. You will only find you'll find more women pilots in. So they go to that level of and that's why Indigo. There are 3 airlines in the world which are net worth positive.
What is net worth positive? Is it?
Your balance sheet has cash plus. Everybody makes loss. Airline is one business that's called if you want to lose money, become bankrupt, start an airline.
Yeah.
Right. Everybody became bankrupt by
Starting
doing an
airlines.
airline. Right. Indigo is among the 3 most profitable airlines in the world. Another important thing, they only buy one particular model. They buy Airbus A320, the neo models, which means you can service your aircraft anywhere.
Okay.
So your aircraft won't be grounded for too long if there is a maintenance. So they cracked it, and look at from the IPO, the stock is up 5x. And every other airline is struggling to survive. SpiceJet is trying to avoid bankruptcy.
Right.
You go anywhere in the world. So a lot of commonsensical stuff, can get to that. I'll give you another example. You pick the best-selling car today.
Which is it, Creta?
Which is Creta, XUV 700, Tata Nexon. You get that in the auto data. Every month there is a SIAM data that these many cars are sold. So you can buy that stock. This is a best-selling car. Then you figure out who's the component supplier of the car.
Okay.
Okay, so if you sit on a steering, you have switches, you have power window switches, you have alloy wheels, touchscreen. All of this is made by Uno Minda.
Who?
Uno Minda.
Uno Minda. Okay.
Right, so airbag, alloy wheels, touchscreen, switches, horns, LED lights.
They do it for all the...
Mostly. They have like a lot of products, they have 50-60% market share.
Okay. For most car manufacturers, they are the suppliers.
Yeah. The stock is up 20x in last 6-7 years. It was started with the main supplier of Maruti.
Okay.
And now it supplies to everyone. So the best-selling model can change. The component supplier will not change so quickly. Then you figure out who's supplying the software for the car? The car is becoming smarter, right?
Yeah.
It's called CASE, Connected, Autonomous, Shared, Electric.
Okay.
That's
a
the name
company.
of the software for the cars, which cars use. So cars want to today capture all data. They want to capture the tire pressure when you're going to the hills.
Correct.
They want to capture the AC being used on different temperatures, and then this data can be sold later as analytics. So you figure out who's the supplier of the software of the car. Earlier, the software costs in the car was 10%, 5 years back. Today it is 30.
Wow.
By 2027, it will be 60. The car will be basically a computer.
Okay.
As you go forward. So once you do the value chain map, the best selling car you can buy Tata Motors on M&M, you can buy Uno Minda. Software is made by KPIT.
Okay.
Right. Then you can want to go level 2. Who makes the locks? Who makes the tires? Right. So if you do very commonsensical stuff, you can get into it. I mean, all you got to do is figure out the size of the opportunity. Right. How big this opportunity is, for example, in terms of size. I'll give you an example. China and India used to sell same number of cars in 90s.
How much was it?
About 10 lakhs.
Each. 10 lakhs
10 lakhs each. About 8-10 lakhs each. China today sells 2 crore cars a year.
Okay.
We sell 35 lakh.
Oh, we've not caught up.
We're not caught up. Because the per capita there went up faster. Right? But we sell 2 crore motorcycles a year.
Okay.
But China sells lesser motorcycles than car, which means what's going to happen is people will migrate more and more from 2-wheelers to
4-wheelers.
Right? Within that, people are wanting SUVs.
The compact SUVs.
That is why Maruti is not doing well.
Okay.
Maruti only makes more sedan, right?
Right.
So if you just track the consumption trend, right? Flying in an airline, driving a car. The examples I gave you, these are all 10 baggers in last 10 years. Some of the names I took, 5 baggers, 10 baggers, right? So a lot of it is commonsensical stuff. Let's say you're traveling today. What is the buzzword? Vande Bharat. Right? Government has launched 50 Vande Bharat.
These are the trains, right?
No, the new trains, right? Which we call our Eurorail, right?
Which
it's not really Eurorail, but yeah, that's what. They want to make it 900 by 2029.
How many are there right now?
50.
50 to 900?
900.
Okay.
All you got to do is figure out who makes the Vande Bharat and metro coaches. Metro is another. You're having every city is now having a metro. Bombay is now. There's a company called Titagarh and there's a company called Jupiter. Right? They make the coaches. So you'll have 800 more trains which will come. Then you have Rajdhanis and Shatabdis and Sampark Krantis of the world which needs to be changed. Then in a train, you figure out what do you need. You need a transformer, you need a traction motor, you need locomotives, you need wheels, you need electronic systems. You map it, you'll get your ideas. Only thing is, you have to think 4, 5, 6 years. And we get anchored to the price. If you become anchored to the business and use common sense, chances are you'll get 6 or 7 right out of the 10 choices you do. So
okay, so let me just break this down. We've been talking for so long. So essentially you're like, understand what the macro trends is, what is the consumption trends.
Yes.
So basically India is getting richer and richer. So more people are taking flights. Understand who are the airlines which are, winning this game. More people are moving from 2-wheelers to 4-wheelers. So basically India is mirroring what is happening in China.
Absolutely.
And then you're like, don't just stop with the end consumer company.
Yeah.
Meaning if a company is selling cars, don't just look at that car company.
Yeah.
Look at who is supplying to this car company because they're also benefiting.
Yeah. The bigger money is in ancillaries, always.
Okay.
Because those are smaller names.
And not many people have heard of it.
Not many people have heard of it.
So it doesn't have froth in those companies.
Absolutely.
Right? The retail investor would not have heard of it, so they're not probably investing in those companies. Like the Uno Minda company you named, not many people know about this company, right?
And it's become 20x in last 7 years. And Maruti has not moved much. Maruti was 10,000 rupees in 2016. It's still about 12,000 bucks.
Damn. So now is understanding this macro trend, I got it. Now the thing is, okay, let's say I've identified this stock. Let's say Uno Minda, right?
Yeah.
Uno Minda identified this stock. Now, obviously, the price also considers these kind of things.
Sure.
Right? Uno Minda is like, okay, a lot of people know that this company is going to benefit. And it is like, it has 50-60% market share in terms of providing these equipments to these automobile companies. Now, my question is, how do I know if the stock price is correct? Do I need to get into it? Because sometimes it could be really overvalued. Yeah. Like, for example, Nvidia. Like a lot of people have heard about it and now the stock market has gone skyrocketing. I think almost 1 in 3 employees over there is a millionaire.
Sure.
So the stock price has gone up so much.
Sure.
So how do I know what is the right stock price to get into?
Sure. So first thing is look at the valuation of the company. It's available on a screener or a money control or any app today digitally. You can figure out, right? Figure out last 3 years of top line growth.
So let's take this example.
Yeah, let's take Uno Minda for example.
Yeah.
They used to supply components worth 2,000 rupees to Maruti in 2016.
Okay.
They only used to make central lock and horns.
That's it.
Yeah.
Okay.
Right. So if you go to the company website or you go to their annual report, today they supply components worth 38,000 rupees to the car.
So basically car ka components 38,000 rupees worth.
Airbag ही 15,000 का है.
Okay.
Touchscreen होगा 7-8,000 का.
Okay.
Alloy wheels हैं. You add up, it will come to 35-40,000 per car.
Okay.
How much it has gone up?
It was, you said 2,000.
2,000.
To 38,000.
20x?
20x.
That's the growth in the stock. Last 7 years.
Oh, okay.
Right. So what I'm trying to say is price performance is a function of business performance. So if your top line is also growing, if your profits are also growing, the stock price will
has to go up.
Eventually follow. It may not linearly follow.
Right.
I'll give you another simple example. 90% of the market in India when Titan came, it was family jewelers. 95%. We used to go to the family jeweler. There was no organized jeweler. Purity was an issue. Everything was an issue. Titan used to make 40 crore profit and 4,000 crore sale at one point of time.
4,000 crore sale, 40 crore profit.
80 crore profit, 50 to 80 crores profit.
That's not
when
a lot.
Rakesh Jhunjhunwala started buying it.
So that is like a 1% profit.
Us time pe, because they were struggling to gain market share and all that. Today they make 4,000 crore profit.
Okay.
The top line has become the profit.
Wow.
The stock is up 100x. I don't know if you're aware, Titan has a bigger SIP book than HDFC Top 100 Fund.
What are you saying?
Yeah.
Really?
So it's called Golden Harvest. You pay 11 installments, the 12th one is free.
Okay.
You start an SIP in Tanishq. Okay, let's say 5,000 rupees a month. You pay 55,000. On the 12th month, you can buy a jewelry worth 60,000.
Okay. Okay. And
so they started linking your marriage plan and jewelry plan with your goal. So they also did goal planning. Actually, what we are talking of now, last 3 years, Tanishq actually did it 20 years back.
Damn. So, okay. So now I understood that you need to look at the macro trends and go very deep in the business model.
Yeah.
Right down to, what are the supplies for these companies. And the stock price usually follows, with the revenue growth and the profit growth.
100%.
And if you can analyze the business in a sufficient manner, you can make a bet that, okay, the revenue will go out, profit will go up. Now, the next question is, how much money should I actually put in this particular stock? Because, let's say I have 10 lakh rupees of savings and I identified this stock. A lot of people get confused. How much should I put? And that is where people make the mistake. They're like, I'll just put 1,000 rupees and see kya hota hai. Remaining money will be in FD.
Yes.
So much research they'll do and they'll put a small amount of money. So my question is, how much money to put? How many stocks should I have in my portfolio? And what is the returns that I should expect to even make it worth my time? Because had I put in a mutual fund last 30 years, I would have still gotten like a 15% return.
Yes. So I think there's no perfect answer to this. Peter Lynch made 28% returns. He's arguably the best investor and portfolio manager of our times. 28% CAGR for 20 years.
Wow.
And he did it with 100 stocks.
Okay.
Right? But he had a team because he was a portfolio manager. Warren Buffett with Apple had 45%. He had one stock which was 45%. And he made 19%.
Wait, Warren Buffett had one stock which was 45% of his portfolio.
Yeah. Apple was almost $150 billion of his $350 billion portfolio.
Wow.
Yeah, he's obviously off late started.
Now he
selling.
has started selling.
Yeah, but so I'm saying concentration works with people if you have a big team. Like Rakesh Jhunjhunwala, Titan was 16,000 crores of his 35,000 crore wealth. So one stock actually made a fortune for him. Wow. He went wrong on a lot of stocks. He went wrong on Yes Bank. He went wrong on DHFL. He went wrong on so many stocks. His airline obviously is not doing great.
Akasa,
but but one big winner, actually two big winners, CRISIL and Titan actually, just made it right, everything for him because he bought it in a good size. So what to buy is important. How much to buy is even more important.
So can you tell me
So I would say there is a saying in our house that they say how many kids you should have, how many members should be in the family.
Okay.
The ones you can easily feed.
Okay.
Right? So number of stocks is indirectly proportional to how many you can research and keep track of. Right? I think that number for a retail investor should not be more than 20-25.
Okay.
It's very difficult to track more than
20-25 companies.
I would typically say if it doesn't come in a piece of paper, you're over diversified.
Okay.
Right? So it ideally should come in a piece. Your portfolio should fit in a piece of paper.
Got it.
A piece of paper would probably have 20 lines and So you should not take too many stocks because then you lose focus. Second, if you're only buying 1%, then it's not going to move the needle unless you have picked up a 100 bagger.
No, what do you mean if you're only buying 1%?
1% of your corpus. Let's say you have 10 lakhs and you bought for 10,000. Now, even if it doubles,
correct,
it doesn't move your needle. It's only made 10,000 rupees for you on 10 lakh.
Correct.
Right? So typically don't buy less than 3-4%. If you're very convinced on something, if you like something,
put like 3% of
at
your
least
money
3%,
into that stock.
Right? And highest, I think you should ideally not cross 10%.
In a particular stock.
That's my way. It's not that because SEBI says so in a mutual fund. It's just that the concentration can sometimes eat away your return.
But in case of Warren Buffett and Rakesh Jhunjhunwala, that one's 50%.
They are professionals. They have a big team. There are thousands of people working for him. I'm talking of a normal investor, right?
So you're saying for a retail investor, don't have more than 10% of your overall money in one particular stock.
Yes.
But you're telling me that Warren Buffett and Rakesh Jhunjhunwala, it's okay for them to go to that 40-50% because they have a large team. Yeah. So can you tell me what sort of extra insights that these guys are getting, which a retail investor or a normal investor cannot get? Like what additional information that a Warren Buffett have, which I don't have?
So this 40% was not on day one. Rakesh Jhunjhunwala ji bought Titan at 5 rupees, then he bought it at 50, then he bought it at 100. He also bought it at 1200.
Okay.
His last purchase was 12 or 1400. How many of us can buy a stock after the stock goes up 100. So the conviction also comes with time. Warren Buffett also didn't buy Apple at one go. It did not become 40% on day one, right? And their full-time job is investing. For a retail investor, the full-time job is a salary or profession he's doing, right?
Yeah.
So if you're full-time into it, then you are a professional. Then you're not a retail investor. So only if you're full-time into it, take these concentrated bets and your capital allows you. Let's say these guys, if they lose, some money, it doesn't matter to them. A guy who has 20 lakhs of worth of savings puts 10 lakh in a stock and stock goes, bottoms up or belly up, then,
right?
So it's also, So if you are a professional, then it's fine to be more concentrated, go maybe. And conviction also, don't do it in one go. It gets built over a, period of time. So resources, time, and most important, patience.
Okay.
So there are periods where the stock gives zero returns, right? Reliance, I'll give you an example. 2011 to 19, zero returns.
Really?
Yeah.
From
then it became
8 years, zero
return.
Reliance we're talking about here.
Yeah.
Okay.
Reliance, the biggest company in India,
has given 0%.
Zero returns for 8 years.
Okay.
HUL in 2003 to 7, when stock Sensex became 5 to 21, gave zero returns. It was 250, 300, 250, 300.
Okay.
After that, it became 2,500, another 5 years. So the returns can be very, very non-linear.
So even if the company has been growing, the stock price did not grow. ये भी होता है.
It can fall out of favor. Market might find another frenzy like it's finding right now in defense and railway and new energy, right? So it's market is collectively all of us. So sentiments prevail in the short run. But in the long run, only fundamentals will prevail. Only the stronger ones will survive, right? So give yourself time. So have loads of patience. If you're buying individual stocks, you should have loads of patience. You should be okay with stock going down, 10, 20, 30%, not doing anything for few years. As long as your thesis that top line is growing, earnings are growing, margins are expanding. I think these are 3 big filters.
So revenue is growing, profit is growing, and the profit percentage is also growing.
Margin is very, very important because margin reflects the value addition company is doing. Okay. Coming back to the Uno Mundo example, Maruti, if you remember, used to sell hotcakes, Wagonar, Swift, Brezza, all those models. It had cracked that 1.3 liter engine.
That 4-5 lakh segment.
And then it made various models. Started with Alto, went up to 10-11 lakhs. XUV 700, Mahindra cracked the diesel engine, which was that 1.7 liter. And then the market started moving towards SUVs, as cities became more flooded and all of that. So sometimes you just crack a particular model. And Maruti did not move to SUV. So Maruti's margin fell from 18% to 11%.
From 18%, it went to 11%.
It actually went down to 8%. Because they didn't move to SUVs and the sedan sales were not really catching up.
So because they did not innovate, the profitability went down.
Yeah, no, they were selling 7 lakh cars. Now they are selling 18 lakh cars, but the margin dropped from 18 to 11, which means the profit also dropped.
But why, if they have gotten more and more sales, how did the profitability come down?
Because you are not value adding more to the car. You're still selling the low end car.
Okay.
If I add more features to the car, right, I can sell the same car for a few lakhs higher. So I derive more margin out of it. It's like you pay 1.5 lakhs for an iPhone. but you don't pay more than 50,000 for the other one. No, the features are almost same. It's the premiumization. So 1 or 2 features Apple will put in, which will make you pay that.
So basically, Maruti could not command a higher and higher price, but their cost kept on increasing. So that is why their profitability kept on shrinking.
So the margin reflects how much value addition, how much premiumization, how much tech, how much research you are doing. That gets reflected in the margin. So never buy companies where the margins are shrinking, are static.
Which means not enough innovation is happening.
Not happening. At some point of time, you'll reach a saturation level. And
Can you give another example where a company started innovating and then the profit margins shot up?
Yeah. So I bought a company called Solar Industries in 2016.
Solar.
It's not solar energy. It's a defense. It's an explosive company. It used to make explosives.
Like bombs?
Like bombs. The explosives were used for mining. So Coal India used to take explosives. A lot of mining companies used to take. My father-in-law had a crusher in Nagpur. So he used to supply explosives to them. So that's how I came and met this gentleman. And I'm always inquisitive. It was a listed company. So I went to their site during my stay at my in-laws' place just to see what does he do. And I went to his site and I saw some people from defense ministry there. And I asked him, what are these guys doing here? He said, we're trying to move into defense now. We want to make bombs. We want to make high-end bombs, rocket launchers. We already make explosives. So I laughed at it. I said, I mean you're making a loose, ammonium nitrate. How can that translate into? Then they took me to their training. It's called a weapon assessment range. They have a 150-acre land where they check weapons.
Okay.
Right. So they made me burst a hand grenade. For the first time in my life, I threw a hand grenade in a it's like a well.
Okay.
Where you threw that. And they were making that hand grenade for.
So how does it feel like?
Oh, it's a great feeling. I mean, you almost want to blow up a few people who disturb you.
Like how loud is the sound? Like the grenade?
It's quite loud. You have to put the headphones and the.
Do you feel the force or something?
Yeah, it's a bit of that.
Okay.
You can feel the impact, right? So the first thing I thought, it's a very difficult thing to do. If I even give somebody 200 crores, is he going to make bombs in the jungle? Sit with tribal people, take environmental clearances and all that. And at that point of time...
This is in the jungle?
It's 100 kilometers away from Nagpur.
Okay.
You can't test weapons in the main city, right? You have to go out, right? And they were making a hand grenade for 1/5 the cost India was importing from Germany.
Okay.
That time the price was $600.
For what?
For the stock.
For the stock, okay.
Yeah. That time they used to do their turnover, their profit per quarter was 10 crores.
Okay.
15 crores. I bought the stock. I said, I've come so far. I found it interesting. The entry barrier is high.
Entry barrier being, I need to have like 100-acre plot of land in the outskirts of the city and test all these weapons.
Yeah. And, it's a very difficult thing to do. I mean, making bombs, testing, getting approvals from government, very, very difficult job to do. No normal person can't do it. Right?
And they had secured all the permits and all of that. Everything. So high barrier to entry to get into this business.
Today the stock is 12,000 rupees.
From what did you say it was?
500, 600 bucks.
From 500, 600 went to 12,000 rupees. So 24 times.
20 times. More than 20 times.
In how many years?
In about 6 years. 7 years.
Wow. So this is an example of innovating.
Yeah. So now the defense, now they are making drones. They are making Pinaka rockets. Pinaka rockets is what you're seeing Iran shoot at Israel.
That one.
So those ranges. They are making satellite propellants. They have invested in a startup called Skyrocket.
Okay.
Which India's first private rocket launching platform.
Okay.
And they're doing, I mean, you have to visit their to see what they're doing. So it's actually become from a pure bulk explosive chemical company to a new age defense company. Same raw material, same ammonium nitrate.
So ammonium nitrate, which they were used for making blowing up coal
explosives
mines,
and blowing up mines.
Now they're using it for
sophisticated weapons, drones, rocket launchers.
Damn.
Right. So that's innovation. Now they are making 200 crores profit per quarter.
Wow.
From let's say 20 crores what they were making. So you just pick up a defense, just map it. It's on Google. You don't have to do too much. Figure out who's doing drones. Figure out who's making ammunitions. Figure out who's making guns. Right? Who's making combat vehicles. You will get the list.
So it's like a golden opportunity. It has to happen.
Has to be patient about it. Just, it's not going to happen now. It's going to take 5, 7, 8 years.
Now, let's say I don't want to do all of this research because there's obviously going to be some lazy people, right? Sure. And I know that defense is growing. So is there like this one investment opportunity where I can just close my eyes and put into this to ride the defense wave instead of researching the individual
buy the defense
stocks?
Index. It has 11 stocks.
Okay.
So there's a Nifty Defense Index.
And that itself has given that 100%
It's down 20%
growth.
from the peak. By the way, the market is all-time high. The index is down because there was a euphoria.
Right.
But that's one simple way of playing it. The other way is, give it to a nice professional and ask him that I want some themes to be dominant. Defense to be dominant, semiconductors to be dominant. They say semiconductor is the new oil.
Yeah.
Data centers to be dominant. You can specify niche themes and give it to a professional. If you have those resources, because professionals will have a minimum threshold of 50 lakhs, 1 crore plus,
Correct.
depending on the license. So you can do that. And if you're a retail investor, buy the index, buy a thematic fund and play it.
So I want to go, you just lightly talked about the clean energy sector. And there is this data that I read. The Commerce Secretary, right, is saying that India is offering an investment opportunity worth over $500 billion in clean energy, renewables, green hydrogen, and electric vehicles by 2030. Right, this is again, a macroeconomic trend that is coming towards clean energy. So, knowing this news, now how do I go deeper? How do I identify those stocks?
Make the power value chain, right?
Okay.
So we launched an NEP 2 days back, National Electricity Plan. It says the peak demand of electricity by 29 will be 470 gigawatts, almost 500 gigawatts, which they're saying it will double from what it is. Right now, you are roughly about 240.
Okay.
Which is a 14% growth.
So what is 240 gigawatts
is your
what?
Peak energy demand.
Of India,
right now.
240 gigawatts.
240 gigawatts. They are saying they expect it to become close to 500 in 4 to 5 years.
So can you just help me understand in terms of layman, like what does 250 gigawatts actually
So let's
mean?
say I consume 100 units of electricity today as a country, which is household, industry.
Yeah.
I would need 200 units 5 years from now.
Okay.
So which means
It's going to double.
It's going to double, which means the power generation will grow at 14-15%. The economy will grow at 11%, which is 7% growth and 4%. The power generation will be 14-15%.
It's going to go faster than the economy.
Because the demand of energy is going. Data center needs tons of
And that's why is there demand coming for this? For power?
electrification has been done for villages.
Okay.
So as you become more urban, as you grow, you will have more electricity, more consumption of. Semiconductors needs tons of energy. AI needs tons and tons of energy. Data centers needs tons and tons. Your EV needs charging. Your telephone needs charging. Your gadgets needs. So energy demand is only going to go up. Right? It's not going to come. And you're moving towards electric more than thermal. So your overall demand is also shifting, right? So your demand for generation will go at 14-15%. The first thing I should do is pick up a power generating company who makes power. So NTPC has 40% market share.
Okay.
It's a simple, Tata Power hai. JSW Energy. These are the energy producers. Okay. Then the government says, Prime Minister says, I'm going to put 3 crore solar panels on 3 crore houses. He announced it in the budget.
Okay.
So every house will have a solar panel and he'll give incentivize to the houses who put solar panel. He will give them electricity at 2 rupees or 1 rupee a unit.
How much is it otherwise?
Currently it's about $8-9. So he'll practically offering you energy at,
he's saying that if I put a solar panel on my house, I can get
I'm subsidizing you. I'm basically
I can get the electricity for cheap.
You're actually producing, it becomes free because solar panel will also produce. Now you'll be able to sell also, right?
Correct.
Right. So I'm making, so every house will put. So what should I do? I will pick up companies who are heavily into solar panel.
Okay.
Right. Then I know this energy has to be put in the grid. I can produce energy. It has to be put in the grid.
It has to be stored somewhere.
So as per your data, this Commerce Secretary also said we need $300 billion of only transmission capex, the grid lines, the transformer, the insulators, right? So then you pick up the second company which has a market share in transmission, power grid, 65% market share in transmission.
Okay.
Then you pick cables and wires. You pick, transformers. You pick insulators. You map the power value chain. You will get your 5-7
stocks in that.
Right. You have to think like that. You have to think in terms of the demand, the big picture. Make the value chain. Break it down.
So, and also in these kind of macroeconomic trends, the companies also have that moat.
100%.
Right? Not anybody can come in and take up 100%. This market share. Right? So these established companies are usually the ones who are going to get most of the value from this
100%.
and going to reap the benefits.
100%.
Interesting. 100%. So that's what. So the fastest way to make money is obviously, to be an entrepreneur. Now, if you cannot start your own business, might as well identify those companies who will benefit from it. So you cannot say that, okay, I'm late, now I can't start my own business. There are already businesses out there, you can invest in them.
And look at this way, by paying $450, I can become an owner in Tata Power. By paying $400, I can become an owner in NTPC.
Right.
By paying $350, I can own Power Grid. You can part own so many growth stories in India.
Right.
Just by committing very simple amount of, capital, staying patient with it, and, enjoying the journey.
Okay.
Now, any developed nation, manufacturing to GDP is in 20-30%. We are at 15. Government has an official target of 25% manufacturing to GDP by 2030.
But why do they want to increase manufacturing?
More jobs, more self-reliance, less dependence on imports. So it's logical. And if you grow, you want to be producing more rather than consuming more.
Instead of importing the stuff from other countries, you manufacture
you make your
it
own
in-house.
stuff. Also, you don't want people to move out of agriculture more. You want to create more jobs.
Plus gives more jobs and creates more people into the job ecosystem.
100%. So today it is 15, which means when you hit 10 trillion by 2030, right? Today manufacturing market cap is $500 billion. All manufacturing companies put together.
Okay. That should become 2 trillion.
2.5 trillion.
Because it has to become 25%.
25%. Which means while the broader market will be 3x in 10 years, the manufacturing could be 5x.
Wow. Okay.
Right? So these are some of the things you need to, look at it from when you're I am a very long-term investor. So I will always talk, you would have noticed 5 years,
right,
10 years. So pick those trends.
So these are the inefficiencies that you're talking about. One was in the financial sector. It is,
it is overweight in my view. It should come down.
It should come down. Right now it's 35%, you said.
It's almost, 34, 35.
35%. Second is the pharma sector, healthcare
only
sector.
5%. All HDFC Bank is more than all pharma put together. Imagine.
Got it. So there is another inefficiency over there. And the third one is the manufacturing sector, because that is something that the government's objective, that it has to increase.
And they're doing Make in India. They're giving a lot of push.
Of course.
They've given a 25% corporate tax cut.
Right.
So they're giving a whole lot of incentives to do that.
Correct.
And then you figure out what is good for India. Energy is another, I told you, will grow it. So figure out what's going to grow faster than the economy and then get positioned.
So let's talk about today. The market has corrected by a lot. And this is obviously because of geopolitical tensions that is happening. Yeah. So how much can I, control these sort of risks in my portfolio? When things like, what's happening in Europe, something that's happening in Russia, or something that's happening in the Middle East, how do I, control these sort of things from affecting my money?
So I always say every 10 years, Nifty becomes Sensex.
Okay.
So I started my career in 2003. That Manmohan Singh came as the Prime Minister. Nifty was 2,000, Sensex was 6,000.
Okay.
When Prime Minister Modi came in 2014, Nifty was 6,000, Sensex was 25,000.
Okay, so it's just matching.
In 2024, Nifty is 25,000, Sensex is 85,000. So what should be the Nifty for after 10 years?
85,000. So you're saying these kind of things.
So I'm saying you can't control. Every last 40 years, Sharan, every year there is a 10% correction.
Every year there is a
10% correction.
Every year?
The name changes.
Okay. For the reason?
Every 2-3 years, there is a 20-25% correction.
This has been a trend in the last 40 years.
So for example, 2002 was dot-com bubble. Before that was Kargil war. 2005 was the inflation, 2006 crisis. 2008 was Lehman. 2011 was Fed taper. Right? 2015 was demonetization. 2018 was GST. 2020 was COVID. Right. 22 was Russia-Ukraine war. I mean, I can go on. I can name, the name changes.
But is there something that I can do during this instability where I can, make some extra money? Is there some ways of doing it, or should I not even bother?
No. So we call it step-up investing.
Okay. Right?
So normally you make 14-15% in the market. The guys who make 20% are the ones, it decides what you do in a crisis. The big guys, you name Warren Buffett, you name Rakesh Jhunjhunwala. Rakesh Jhunjhunwala bought Titan when it was about to go bankrupt. Okay. Warren Buffett bought Citibank. I was in Citibank then. For 50 cents. The stock was $50. People thought Citi won't survive. He took a call, Citi will survive. America will survive.
It was $50?
And it came down to 50 cents in 2007. 99% gone.
Oh.
It came less than $1. It came intraday though.
And then you
remember oil became negative when COVID happened?
It did?
Oil price became negative because there is a storage cost for the oil.
Oh. But how is that even possible, like negative oil price?
Because there's a cost of storing the oil. You need vessels, sophisticated. That adds to the cost. Okay. So people actually shorted, went long. I'd say $0 or kitna niche jayega. It actually became negative and they lost money, right? So what I'm trying to basically say is never waste a crisis. Especially in a market like India, See, you don't need me. You don't need anyone to make 12, 13%. That Nifty will do it for you.
Correct.
Another good thing, last 40 years, market has given 14%. There are only 2 years it has given 14%. So either it gives way above or way below. So it's like life, you have a good days, bad days.
Correct.
Virat Kohli gets out on 0. He doesn't stop coming back to back the next day, You run today, if you take your blood pressure today, twice a day, you'll have different readings. Market is like, straight line is when you have to be worried. Right? हमारे यहाँ एक जोक है कि I think Rachna said this, ये market हो या इंसान हो, सबने ऊपर ही जाना है last में, right? So I think what you got, so 2 things you should do. If you have liquidity, try nibbling in.
So let's say right now, everybody is saying crisis. Yeah. Market is gonna correct. Yeah. So it could be any reason. It could be a geopolitical reason, war, government policy changing, whatever.
Yeah.
Now, how me as a retail investor can take advantage of a bad situation and make extra returns. Like you said, market generally gives 12%. Sure. If I don't do anything and sit back and relax, it'll give 12% for a long-term period.
Yes.
But I obviously want more. I want the 20%, 25% returns. So how can I take advantage of a bad situation and make more money?
Sure. So one is tactical, one is strategic. The tactical could be that, okay, everybody's exhausted their inventory of, bombs and missiles and ammunition because now we've had a extended war with Russia, Ukraine, NATO supplied to Ukraine, now Iran, Israel, US is supplying. So this time the defense inventory is at 50-year low. After World War II, this is the lowest level of defense inventory we are sitting at.
Inventory means they are running
existing
out of
stock of ammunition is at a lowest level.
Because of all these wars.
The best thing to do right now is to buy more defense stocks, if you ask me, right? Okay. So that's one way of thinking. Second way is ask yourself, which companies will survive?
Healthcare?
Will a Reliance go down if there is an Iran-Israel war?
No.
Answer is no. Will a Tata Consumer which sells tea, coffee, Starbucks?
No.
Tata Sampann will, will an ITC, people will stop smoking?
No.
Because 80% cigarettes make. Ask yourself these questions.
So recession
goes towards stable companies right now, which are going through a tough time just because of this news. See, Infosys was 1,300 6 months back, Sharan. People thought AI is going to finish everything. HCL was 1,000 rupees. Right? Today, Infosys is 1,900. HCL is 1,700. The stocks have become 50%. So whenever the market has extreme narrative, negativity, figure out which companies will survive. Go towards safer, established names. Pick them up. Right?
Right.
And sail through. Second thing is become tactical. China has given a stimulus. Okay, what will happen? China is going to produce more steel, more commodities. Typically, commodities do well when China gives a stimulus. It is a very large giant, right? So you can buy commodities, right? So you buy, which is an immediate beneficiary of the war or the stimulus. Long term, you buy good companies going through a bad. Nibble into it.
So for the tactical, you're saying if there's a bad time coming, let's say for example, war is happening, ammunition level is low, so I will logically have to invest in defense stocks.
Sure.
But if I look at the overall ecosystem, then I need to identify companies which are recession proof, which are needlessly over impacted because of the market news. Identify what those stocks are and invest in them.
Yeah. Ask yourself, is this company going to survive? Will HDFC Bank make through?
Of course.
Will SBI, so if you ask these questions, you'll get maybe 10, 15 names, nibble into it. If you don't understand anything, just buy a good mutual fund. Let him take that call. Give him the money on a dip. Let him make that call. If you're confused, not make the call.
Right.
Thirdly, remember, nothing in India really lasts for a long period of time. 2008, since we were at Lehman, markets corrected 60%.
Yeah. How did you feel? Like 60% drop?
I was in Reliance Mutual Fund then. And
what is happening? 60%
people used to
drop.
come crying to office. That time there was no digital redemption.
Okay.
And a lift used to stop working. People used to, queue up there. And, we felt it. I mean, we were very young. I was
like the customers came crying to
Yeah, they're crying. They said, my NAVs dropped 60%, 70%. What do I do? And they're crying and, I want my money back. Nobody had seen that.
This is 2008.
25th October, it made a low. I remember the date also. June 2009, we were back at 21.
Oh.
Yeah, COVID. 27th March, if I'm not wrong, or 28th March, we made a low of 7,500 Nifty from 12,000. May end, we were back at 11,000 Nifty.
Okay.
Right. So
within 7 months, it recovered.
It's if you really control your emotions during that period. See, the loss is notional till you act on it. So is profit. Right. So till the time you don't act on it, it's a mark-to-market loss.
So let's say the worst situation ever. You are talking about 2008 financial crisis. Let's say I had 10 lakh rupees invested, 60% crash. Now it's 4,000 rupees. How long did it take for that 4,000 to recover back to
It took
10,000?
6-7 months exactly to recover. The
That's
entire
it.
amount. Yeah.
6-7 months mein, that 60% loss was recovered.
Yeah. This is factual. This is
And even in COVID time also, a similar story happened.
Infosys dropped 90% in the dot-com bubble. Infosys, like a stock like Infosys, dropped 90% in
Wow.
the dot-com bubble. Now, had you sold it, you would have gone. Apple has dropped 50% 4 times in the last 20 years.
Wow.
This is world's largest company. So it happens with the best of people.
Right.
You can't avoid it. I'm saying...
But at that point of time, your logical part of your brain is off.
Yeah.
You're in panic mode.
Your
Because it's your life savings,
emotion
obviously.
state.
Right.
And we always say we are more behavior managers.
Right.
If you manage behavior, you manage risk.
Of course.
I think that's a larger part of the job. And that's where
Right.
most people get it wrong.
Got it. So, Gurmeet, now we've talked so much about so many case studies in the stock market, so many opportunities to be made, or so many opportunities to become rich by investing in the stock market. And we also know that India is a developing economy, one of the fastest growing economies in the world. They're currently sitting at $3 trillion of GDP. It's going to go to 10 trillion by the end of this decade. But even then, if I look at the data, right, there's this RBI data of the investment decisions that an Indian takes. So what that data says that an average Indian, almost, I think 85%, if I'm not wrong, 76% is in real estate.
Yep.
Right? And another 10% in gold. And, barely 5% in mutual funds and equity.
It was 3% before COVID.
Right. So it's barely 5%. And if I look at a country like US, 55% market participation, 55% of Americans, they have about 350 million people, 55% of them invest in the stock market. In our case, 1.5 billion people, less than 4 or 5% invest in the stock market. And it's not like, they're significantly richer or something, because there's a lot of people who are in debt, a lot of people who are, almost in the verge of bankruptcy. So what would it take for an average Indian to sort of become more financially literate and reach that level of how an average American investor invests, right? So maybe here you can talk a little bit about, what books I should read, what I should stay updated on.
Yeah.
Can you educate, how can I come to that level, or how can India reach that level?
I'll again give you the 10 trillion picture. That's my favorite picture, actually.
Right.
Indians save 20%. We are the highest savers in the world. That's why recession doesn't hit us.
Really?
We are not leveraged like the way US.
So US saving is how much?
Nothing. I mean, they basically spend everything by the weekend they make. Most of them are on credit card. Look at the credit card debt in US.
How much is it?
It's more than $2 trillion.
Okay. And India, you're saying 20% we are saving?
We are 20% savers. If you add corporate saving, this will be more. But
Okay.
18 to 20% is our saving.
What
So
does corporate saver mean?
The companies which are saved. So companies also have reserves.
Okay, got
Right.
it.
So if you add that, it's 22, 23. But if you take individuals, it's about 18, 19%.
Okay.
Now, when you reach 10 trillion, since you are taking 10 trillion, how much will we save in a year? $2 trillion. Right? Let's say we only invest 10% in stock markets.
Okay. Of that 2 trillion. So that's 200
$200 billion a year will come in the market.
Okay.
That's a lot of money. We need a lot of companies to get listed to absorb that kind of money. Currently, this number is about 3 billion a month gross and 2 billion net. So we are currently about 25 billion.
When you mean net, some people are removing money
Yeah,
also.
people,
So 2 billion net.
Yeah, 2 billion net.
So 25 billion is going into the market every year.
This number will be 200 billion, 8 times.
Okay.
And this is just 10% penetration. I'm not even discussing if it becomes 20 or 25, right? We have 56 crore PAN card linked to Aadhaar. So that's your TAM, total addressable market, right? And we are currently at about 10 crore investors.
The 10 crore people have demat accounts.
Yeah. Unique investors. The gross number would be higher.
course.
So I think one thing is just play the stock markets, buy depositories, buy AMCs, buy banks.
No, that is from a perspective of people who are already investing.
Yeah, in terms of learning, I think, one thing you have to tell yourself, anything which doesn't beat inflation, you are actually on a treadmill. Right? So if you're not, our inflation, middle class inflation, we are talking of people, is not 5%.
7-8%.
Look at, it's more than that, right? Anything which is post-tax less than that, you're actually bleeding. You're not. So I think one book I recommend is which is obviously The Psychology of Money by
Morgan Housel.
Yeah.
Fantastic book.
Second, put calculators in your mind.
Can you give an example?
So 15 is 1 crore.
15,000 SIP, 15 years, 15% returns.
Is 1 crore. Right? So just put that number in your mind, right? Make 2 or 3 buckets. Okay, I would need, let's say, 1 crore for my child foreign education, if I want to send him.
Yeah.
I need, let's say, 5 crores or 3 crores for retirement. What that number could be, how much is not an amount, it's a state of mind, right?
Of course.
Put that number, bucket, ask yourself, how much will it take to get there? The answer you will get, right? So I think it's not a question of whether you should invest or not, right? I don't think so there is a choice.
You have to for survival.
You have to do it for survival. And follow this rule of, 40, 30, 30. I keep saying this. 40 for needs, 30 for wants, 30 for savings. Right? Pay your bills with 40%, provided your salary also has a certain level. And I think it's only going to go up, Sharan. See, you know how much Grow opened Demat accounts last month?
How much?
9 lakhs.
Okay.
Somebody
9 lakh.
like a Grow is opening 9 lakh accounts
In a single
every
month.
month. Since COVID, we have had 1 lakh Demat account opened every month, every day.
Every day.
So we had 5 crore Demat account. We are now at 16, 17 crores Demat account. We have added 1 crore Demat every year.
Okay.
So this number is growing. I don't think so. I think all we need to do is handhold these guys when the market goes in a bad cycle.
Correct.
And it's my responsibility. It's your responsibility. It's for every capital market participant, because these young generation hasn't seen a correction.
Correct. Yes.
It hasn't seen no returns or negative returns for 3 years.
That's what I'm afraid of. A lot of people are getting in because now the market is booming.
We have to prepare them.
Right.
We have to tell them that.
I'm sure you've seen this cycle over and over again. Whenever there's a bull run, more and more people getting into the stock market. Whenever the market crashes, a lot of people stop and let their Demat accounts rot.
It's a marathon. It's not T20. See, there's a reason. I always call it a test match. In a test match, you always get a second chance to bat.
Right.
Or a second chance to bowl, right?
Right.
In markets also give you number of chances. You can come back the other day, right? At 9:59. Yeah.
Now, I have this, interesting research on you. So I was going through your Twitter.
Yeah.
And I went back to 3rd December 2020.
Okay.
And you wrote this. I left HDFC Bank in 2006 and did not vest my ESOPs. Got carried away by a 25% salary hike and switched. Realized my mistake in 2010 and have been buying 10 HDFC shares every month for 9 years. But a colleague of mine who stayed back has now ESOPs worth 15 crores.
Yes.
Lesson learned, never interrupt the compounding process.
Absolutely.
So what happened here? Is this true?
So HDFC used to give ESOPs even at assistant deputy manager levels in those days. I'm talking of 2004-5.
Okay, and it was already like a publicly listed company.
If you got a grade, A rating, there was one rating was A rating. A and B ratings, you were eligible for ESOPs. Mandeep Mehta, I used to remember, was the HR head. And, I didn't realize, I was too young.
Right.
I got 1,000 shares, then I got 2,000 shares. There's this friend of mine.
So only when you get the 1 or 2 rating, you get shares.
You get those shares, right? But now they only give at VP and above. Those days used to give it right down the pyramid.
Yeah.
HDFC has this policy of not hiring people from very intelligent, people from top colleges. They want people, with mid-level intelligence, tier 2 colleges,
but
because they don't pay that well, but they used to, ensure longevity through ESOPs. 2 of my friends have stayed. Even now, they're still there. One of them is my neighbor. That 15 crore number is now 22. This tweet is also 4 years dated.
Wow.
It's 22, 23. In fact, he would have got more ESOPs, so I don't know. Because every year he gets. There was a teller who used to be a cashier.
They are also getting ESOPs.
He was also at an assistant manager grade.
Okay.
I think recently he bought a land in one of his villages in UP. He vested about 3.2 crores.
Wow.
Right. So I've been trying to make up for that by buying few shares. But I'm not even 1/10 of what that has reached.
What you could have gotten.
Yeah, so I have something in a mind called quantity goals. We sometimes get too carried away by this share has gone up so much. I have quantity goals. For example, I want 5,000 shares of Reliance. I want 5,000 shares of HDFC Bank. I want 2,000 shares of TCS. If you put quantity goals in your mind, you can start doing a stock sip also.
Okay.
Think in terms of quantity, right? Like for example, today Reliance fell 5% in 2 days.
Right.
With the same money, I'll get one more share, na?
Correct.
So I get an additional quantity, right? So I think like that. And my goal is that my dividend income should take care of my expenses. So once I reach a certain quantity,
so passive income should be equal to expenses.
So first 15 years active income.
Yeah.
After 15 years, your passive income should take over.
Interesting. And today, have you reached that point where passive income is equal to your
80%.
80% there. Almost there to be financially free. So, all right. So there is another thing that you've written. So a couple more tweets. 85,000 on Sensex, 26,000 on Nifty. Timing is impossible. So many investors sitting on cash since to 21,000 Nifty. You cannot avoid the lows and only enjoy the highs. In life, investing good in life, investing, good and bad phases are integral. Unless you have 5-year plus horizon and can tolerate the drawdowns, avoid investing. So can you tell a little bit more about this tweet?
So on a 5-year basis, market has never given negative returns in India.
In a 5-year basis.
In a
Any 5-year given period.
On a rolling basis, any 5-year you take.
There's never negative.
Never negative. The only 5-year it was negative was if you put in 2003. Even 2003 if you had put in, and 2008 it crashed, even then you were positive.
Oh, really?
So 2003 Sensex was 6,000. The lowest point of the crash was 8,800.
Okay.
Right? So on a 5-year
like even after that 60% crash,
yes.
After that 5-year period, you're still positive.
So historically, you have never lost money if you have given 5 years to equity. So that was the reason I put 5 years. Second, as I said, you will have drawdowns. You cannot
When you mean drawdowns, you mean market
fall in the market. You cannot avoid them.
Yeah.
And the good guys take advantage of it. You step up during those times. So if you are a buyer today, you are an investor. If you panic today and you are now seeing your portfolio, then you have not done the right thing.
Right.
You have to then reassess your risk. Right? That see, the markets can take away 30, 40, 50% like this. You have to be mentally ready to lose that kind of money. Right? If you're not ready, you need to rework your plan.
Absolutely. The last tweet, which is something that recently happened, which everybody's raving about. Of course, everybody's aware of what happened when the Coldplay tickets were released.
Yes.
I think almost 1.3 crore Indians tried buying these Coldplay tickets. And I think within like a few minutes, everything was sold out.
It's gone.
And I did like quick math, right? If I assume that, excluding the black market, if I only look at the white market, on an average, let's say 10,000 rupees per ticket, on an average. 1.3 crore people are ready, waiting in line to just spend 10,000 rupees. Yeah. That itself is a 13,000 crore market. Yeah. So what you've written in your tweet, servers crash within minutes of Diljit Dosanjh show and Coldplay. Urban Indians allocating a significant portion of earnings to travel, leisure, eating out, electronics and entertainment. Out of home and in-home consumption are one of the biggest wealth creator themes in this decade. Yeah. And Zomato is now coming up with this new kind of a company called District, which is all about going out and events and partying and chilling.
Yes.
So knowing how India consumption is growing, a lot of people, especially in metro cities, are ready to pay big bucks for out-of-the-home entertainment. How do I identify companies to invest in and make a lot of money?
Brilliant question. So it's again simple. You pick the best airline today, Interglobe, which is Indigo. Because you go to an airport today, there's more rush in the airport lounges than the railway stations these days. Right. So airline is one good way of playing it. Hotels.
A lot of people today are willing to catch a flight just for an event, which was not the case 10 years back.
So everybody now, Sharan, has a travel budget. The upper end guy wants to go to Europe and exotic locations. The middle class wants to do Singapore and the Middle East of the nation.
Right.
The lowest of the guy wants to do religious tourism. He will do an Ayodhya. He'll go to how many there were 8 times more tourists in Varanasi than Goa last year.
What are you saying?
Yes. So imagine what it does to the local economy. Right, from the dhaba owner to the kirana store, to the panwala, to the lodge, to the restaurant. It just creates a local economy. Europe is all tourism. Europe has stopped manufacturing now, except Germany. Yeah. Years back. It's basically it's tourism. Right. Yeah. So I think it's a great theme to play. And the second thing is we want to be recognized. We want to have premium things. Right. So look at one of the richest guys in the world is the owner of LV.
Yeah.
$500 billion.
Bernard Arnault. Right?
Yeah. So, so everybody wants to now own. So look at Ethos watches.
Basically signaling.
Yeah. So
I want to...
Premium watchmakers, right? Hotel, travel, tourism. I think these are great. There's a tourism index, by the way.
Really?
Yeah.
In India?
In India. So there is a travel tourism index which has all these stocks.
I think that's going to shoot now, considering...
So I think consumption will...
Yeah, everybody loves experience, travel experiences.
We have 7% AC penetration in India. I mean, something like an air conditioner, we have 5.
It's an essential these days.
There are 2 crore bike owners who want to migrate to a car. Ask a biker when it rains. Ask a biker when there is 42 degrees, whether he wants to get to an AC car or not. Right. We only have very limited real estate owners. Do you think you can own a house in Bombay today? Anybody with even 2 lakh salary will find it difficult to own a house today.
Correct.
Housing is a great thing. Wi-Fi, data. So today, we have 85 crore mobile connections, but we only have 3 crore Wi-Fi connections. We have 22 crore houses which are eligible for, which you can call them as who have a roof.
Okay.
Right? So that's about 70-80 crore people live. These are official data. Obviously, it will be more.
Okay.
Which means once you why the reason is we did not have a geo moment in Wi-Fi. What was the geo moment? 80 rupees recharge, 50 rupees recharge.
Cost cut.
The day you give a lower ticket recharge for house Wi-Fi, it's going
penetration will skyrocket.
So the consumption should not be looked at only in terms of consuming physical stuff. I think the data is the new, people, you go to villages, see the reels which are being made on Instagram, see the number of investors MP and UP had. We had more demat accounts in UP than Gujarat last quarter.
Oh, okay.
Yeah. Most of the investors who are coming are under 30. So I'm telling you, the job is to manage them. They are getting in. Now you don't need to do anything to get them in. They are getting in. With the sheer momentum, with the knowledge, all of us are sharing different platforms, podcast, TV interviews, social media. Now we need to manage them. The hand-holding is needed when you go through a rough cycle. And rough cycle will come. It's how we prepare them will decide this 10 crore will become 50 crores in how quick time.
So, obviously we've talked about so many sectors. Everybody is aware that, okay, defense sector will blow up, EV sector will blow up. But are there any of these new things that is yet to come in India? What is the future going to look like in terms of the new industries that's going to blow up in India? Any insights that you can share on that aspect?
One theme which is very close to my heart and is recycling. I think we have screwed Mother Nature, Earth. Indians consume per head 15 kg of plastics every year. Every day, just see the number of stuff we buy, number of polythenes, etc. we use.
15 kilos.
Pet bottles, the way we drink, this 100, 200 ml bottles. We consume 15 kg plastics. Now, government has made a rule that all your pet bottles have to have 30% recycled plastics.
Okay.
Otherwise, you have to pay 5 rupees a kg fine and it goes up to 20 rupees kg every 3 months. By 2028, it will be 60% recycled plastics. You identify a company which is into recycled plastics, you will get the answer.
Got it.
Right. Name is Ganesha Ecosphere. I'll tell you the name because I own it.
Yeah.
Right. So it's a health hazard which has to be addressed. So water treatment, lead recycling, plastic recycling. I think if you don't do it, our survival will be.
Of course. Right? What is the point of making all this money if the country is not safe?
That's one theme I think which is very non-glamorous. When I picked up Ganesha, I went to their plant in Kanpur. They give training to rack pickers, kabadiwalas, how to pick plastics. Very difficult business to do.
Of course.
Making people pick plastics, send it to, make chips out of it, then recycle it. Tough business, right?
Correct.
Non-glamorous, dirty business.
But need of the hour.
Need of the hour. So I think this is one theme. Second, I think India will catch up in semiconductors and data centers.
Okay.
See, US became big by tech.
Yeah.
India will be no exception. So India is doing a lot of steps now in semiconductors. We have signed a treaty with US. So a lot of IP related stuff is happening where we have our own patents and all. I think that space has to be monitored. One big company is Tata Electronics, but unfortunately that's not listed. Right? But keep a tab on it. I think this will be the next big thing over the next 2-3 years. Data center again, we consume 20% of the world data. Data center capacity is only 3%.
For India.
Yeah.
And now, where is our data going now?
So most of the data centers were in Bombay. Because Bombay supplies 24-hour. Data needs 24-hour power. You can't have a downtime, no?
Of course.
So if I'm SDFC Bank, I can't have a downtime. Or if I'm Indigo, I can't have a downtime. So all data centers were in Thane mostly. So now they realize that Bombay, real estate, it takes a lot of real estate. So now they've started moving out of Bombay. For that, you need power. So there are companies which make specialized batteries for data centers.
Like what are these companies?
There's a company called HBL Power.
Okay.
They make specialized batteries for defense systems, satellites, data centers.
So data center is one emerging
Data
thing.
centers, semiconductors, these are, I think, a very, very emerging theme. Recycling, in my view, is the need of the hour. The more we act, there are a lot of companies in water treatment. You have VA Tech Waba.
Is government putting a lot of budget into this?
You have a Jal mission, Namami Ganges mission. There's a lot of money being spent here also. It's just that and the good thing is all companies are very small. All of them are small caps. You'll not find a single large cap company in water treatment.
There is an opportunity. There is a missing space.
Industrial metals, scraps,
unsexy business.
Very unsexy, very difficult business to do.
Right. And what about biotechnology, like, gene,
I told you about the
sequencing
US Biosecure Act. I think it's a huge opportunity for it. It mainly addresses biotechnology because it doesn't want genome mapping data to be leaked.
Because that can be used for, treating humans better. Like you were talking about earlier, that these pharma companies will not tell you the cure. They'll just give you the bandage, right? So they'll want to keep making more and more business. But a lot of work is happening in this genome sequencing thing in order to sort of give you the medicine that you actually need, right? Without having, so that you can be cured better or you can really be fixed for life. So any Indian companies who are doing that?
One opportunity is in contract manufacturing, because Indians are not innovators.
That's true.
Yeah. So on drugs, so a lot of I think drugs worth, if my data is right, about $5 billion are going off patent in next 2 years, and then you will have the generic versions available.
That Indians will pick it up
generic versions can be outsourced, so that will help. There's a lot of work happening on few antibiotics. We haven't had any new antibiotic for last 10-15 years.
Really? India has not made any antibiotics?
No, there's world over there's been not many antibiotics. So you need more antibiotics, and there are a couple of antibiotics which are being researched. Then fertility has become a big issue. Unfortunately, the women are not able to conceive,
right?
Because people start their family late, and there are biological changes.
So a lot of companies coming in
fertility
that space.
centers, IVF, they are. So women healthcare would be another very, very big focus,
right?
Area for
as
that.
an opportunity.
So you have to be in sub-science. The other thing in India is a branded generic market. So here the doctor writes, take Dolo, take Crocin, take Digene. US you buy the salt. In US you'll say paracetamol. So India it's like FMCG. It's sold like a doctor
brand.
prescribed, right? So that is why Indian pharma companies have a higher margin. That is why a Cipla, a Ipca, a Mankind Pharma has done better than a Sun, which is into generics. So go for branded guys more in pharma. Go for contract manufacturers more, and look at hospitals. I think hospitals will be in my view, we are. I think in terms of number of ICU beds per patient, we are woefully short.
Okay.
We need more.
What is
more
the shortage?
ICU. Huge shortage. I think it's one in some 10,000 or 15,000. When COVID happened, all of us remember what happened. There were no beds.
Yeah.
Right. So I think hospital capex will go up. As it's like chicken egg, more insurance coverage, more affordability, more beds. It's all linked.
Yeah.
I think all of that will happen.
So now, what is your viewpoint on startups? Now I know you mostly deal with the public
I'm a
sector.
startup, so
you're a startup, right? But your startup is the one who is investing money in the public markets mostly.
Yes.
But if I had to look at, because we just talked about all the emerging markets in India, any startups in India that you feel like is going to really kill it, will come into the IPO very quickly and make a killer in the stock market? Any startups currently that you're really, really bullish on?
So I'll tell you what I'm invested in.
Okay.
I bought CSK shares, Chennai Super King shares, when it got demerged from India Cements.
Okay.
For $20. My logic was simple.
In the private market?
In the private market. It's still available. Right now, I think it must be around 210.
Okay.
The business model is very sexy. BCCI makes 50% of the IPL money and 50% goes to franchise.
Right.
So last year, the total sponsorship was 46,000 crores, which is digital and broadcast. BCCI kept 23,000 and 2,300 each were given to 10 teams, which means your top line is more or less secured. And every damn promoter in India has a franchise. Mukesh Ambani has it. The Jindals have it. The Goenkas have it.
And these IPL teams, they don't pay tax or something, I heard?
No, BCCI doesn't pay tax.
BCCI doesn't pay tax.
It's registered as a trust. It's like FICCI, it's like schools, it's like
okay.
Vaishno Devi Trust. They are meant to promote a particular thing.
Correct.
It's also called Section 8 companies, if my memory serves me right. You're not eligible to pay tax. So in the sports franchise would be a big opportunity, especially cricket and the way now, even Paralympics are being praised.
What is exports franchise? What does that mean?
Sports
franchise.
So if you look at a Man U, Manchester United, you pick up any NBA league like Chicago Bulls and all, they are all valued between $6 to $10 billion.
Are they on the stock market as well?
No, they're not.
They're not.
Still, some of them I think are listed.
Okay.
So today a Chennai Super King is available at $800 million.
Wow.
Right.
So that's the first startup you named. Chennai Super King is not the first thing that would come in my mind.
I bought it in 2019 for like $20 or something. Right now it's at 210 or 220 in the unlisted space. I think something will come out of semiconductor very soon. There are a lot of startups which are doing some fantastic work in this space. That should come out.
Like, what do you think of the darlings of the startup world, like Zomato, Zepto? Like, what do you think of those
Big
kind
fan of Zomato now. I did not buy Zomato during the IPO because that time Blinkit was bleeding.
Right.
I'll give you one data. They are doing 2,000 crores of quick commerce every quarter.
Yeah.
There's nothing. That's one day sale of Amazon. And government doesn't like Amazon, and so because Amazon does deep discounting. Wherever Amazon does well, the local market gets killed.
So government doesn't like Amazon.
Look at US, JCPenney, Spencer, they're all finished. It's only Walmart which would survive. India is primarily a mom and pop store market, kirana store market.
Government doesn't want to disrupt.
They don't want deep discounts. They want, and quick commerce does the opposite. They integrate the kirana stores. A Blinkit will integrate with the store and will charge you a convenience fees. It's not serving you at a discount. Similarly, a JioMart is not serving you at a discount. So I think quick commerce has huge potential. So once the contribution margin picks up, it's currently about 3%. It's how much you make.
Correct.
Because right now they're only doing groceries. Tomorrow they will do iPhones.
Zepto has now
PS5,
started giving iPhone 16.
Yeah, and Zepto promoter is what, 21-year-old guy.
Yeah.
So I'm very bullish on quick commerce. Also, the fact is that you are ordering 3 times a day now. You're not keeping any inventory at home.
Correct.
Because in 15 minutes you will get. So your frequency, so you'll order 3 times in Amazon in a month. You may order thrice on Blinkit every day.
You're right. Yeah, that's what I heard. Like why quick commerce did not work in the US is because the US culture is more accustomed to buying groceries once a month.
They cook and eat for 7 days.
Correct. In India, we like to do it every day. We don't like to stock it.
Have you traveled from the local train in Bombay? So when you cross
not during
Bandra, so I've worked in Bombay for 2 years. When you cross Bandra, you find vegetable vendors who will give you cut vegetables. The mixture is already ready. The tomato, cabbage, onions. So that when you go home, you don't have to cut them and slice them. Just put it in a utensil.
They sell like that in the train.
So Mumbai is actually way ahead.
This
is happening. This is happening for the last 10-15 years.
Wow.
Right. So they sell you cut vegetables which are already cut into pieces, nicely done. So you just go and quickly
cook.
Absolutely. So time is the essence. See, you have now our cooking time has come down from I think 18 hours a week to about 11 hours. And with nuclear families. This is going. I went to Singapore for a training. They asked me, do you need an apartment with gas or with oven? I said, what do you mean? He said, we have apartments which have no kitchen. So Singapore now has apartments which have no kitchen.
People don't cook only.
No, they just get stuff which is already made. Just
they put in the oven and it's.
Just that.
Oh, that is how
you're moving towards that because we don't have joint families anymore. Nobody wants to spend 3 hours cooking every day.
Yeah.
Right. So you're gradually moving towards. So that is why anything which has got to do with food. See, earlier we used to buy even chai, coffee, sugar, all in the open.
Right.
Now we buy everything. So everything in your kitchen shelf will become branded. Your spices. You know how much pulses we consume in a year?
How much?
It's chana, rajma, dal, 1.8 lakh crores. Of which organized market is only 20%, 30,000 crores. Of which Tata Consumer Sampann is only 3,000 crores. So anything and everything in the kitchen will become branded. So what has happened to a tea, coffee will happen to everything, breakfast cereals, pulses, spices, everything.
So basically,
huge opportunity.
Organization of these premiumization of these everyday food products.
All food items.
But that will usually get done by the big boys in FMCG itself.
No, there are a lot of places. There are a lot of places. So Mrs. Bector serves buns to McDonald's. It's a Ludhiana-based company.
Oh.
A huge multi-bagger.
Oh.
Right. So it's so see, food is something you can't. It's the quality and the taste. Nobody has a monopoly.
So that is an opportunity for new entrepreneurs to come.
Yeah, food processing, in my view, and supplying to MNCs is a huge opportunity.
To give an example, let's say
So Mrs. Bector hai.
Like I'm a 30-year-old person and I want to start a business. Now, what is that business that I can get into which has the highest chance of being successful?
You can make nicely, good quality potatoes. That's it. In your own farms and
what? For
to
Lay's?
Supply to all chain, everyone, Lay's and all your fries, every fast food chain, including Subway, including Burger King, including everything needs those. You can make chicken. You can make very basic stuff. I'm not even getting into the buns and the breads, right? Which you go level 2. So everything can be done. So food, I think, would be a good opportunity because we'll keep consuming more and more. Then you have all of these QSRs, quick service restaurants.
Right.
The total market cap of all QSRs in India, which is Domino's, McDonald's, Burger King, everyone you add, is less than Haldiram.
Really?
Haldiram is 75-80,000 crore market cap. All listed QSR names are 60,000 crore market cap.
Wow, so that's a big opportunity to
huge
blow up.
And this guy sells bhujia and all of that. So India is we are foodies. By nature, whenever we meet, we'll discuss food after 10 minutes, right?
Right.
So this is something which is very.
No, I still remember. I'll give you my example. I'm from a city called Mangalore, right? And about 15 years back, there was not even a KFC there.
Yeah.
And I remember the first day KFC came there was like a huge queue of people wanting to get in. And, people like me, my dad used to take me to Bangalore and had already made me try it. So when it came to Bangalore, it was like a big deal.
Yeah.
I just went 2 months back to Bangalore and now I see a Taco Bell. And I was like shocked, when did this Taco Bell come here? Like all of these, these QSR brands are now started coming to Bangalore city as well.
And Indians love food. What do you miss most when you travel? I mean, you look at Savana Bhavan outlets now.
Yeah.
Right?
Yeah, I was in the US for 1 month.
Yeah.
Until I reached California, 20 days, I had no proper Indian food. Like I was in Chicago, I ordered butter chicken. It was pathetic. Finally, when I went to, San Jose, which is like, half of them are Indians over there.
Yeah, it's a Silicon Valley.
Yeah. Finally, when I went there, I could get like proper Indian food.
So I'm saying there's an opportunity there. And there's as I said, pharma is another, healthcare is a huge opportunity. See, we are, all our companies are very old. So we have a great track record with US FDA.
Yeah.
Right. So you need a good quality track record. We've learned our lessons the hard way. Pharma is another big opportunity. There's a lot of path-breaking research happening in India. There is a therapy called CAR T cell. Okay. It's a cancer treatment. It can treat cancer at maybe 1/20th the cost of what the current cost is.
Okay.
So, so there's a lot of work happening. A lot of companies are doing that. So a lot of path-breaking researches and all are happening. You should focus on companies who are hiring the most number of scientists.
Like, give me an example of those companies.
So, Laurus Labs, for example, hasn't done well last 2 years. I have 25% staff is only scientists, only people in R&D.
Okay. They make medicines.
They used to make anti-retro APIs, which is the HIV drug API.
Okay.
Unfortunately for them, the HIV disappeared. And the drug used to be given thrice a day. The doctor said, now you can give once a day. So the volumes also dropped.
Damn.
So now they are moving towards different. They are now becoming a CDMO player from a pure API player. So it's taking time. It's a painful transition.
Got it.
You can't suddenly tomorrow, next day make different medicines.
Of course. So that's one of the downfalls of pharmaceutical companies.
So pharma companies, in my view, will do well. There are a lot of startups which are doing very good work on contract research. I think will do well. A lot of patents are also being filed in drones and surveillance and simulators, etc. So defense, see, the big countries can take from US, Harvard and Armenia. How about the African nations? Everybody has defense requirements. India could be a big sourcing hub. We are cheaper by nature. We are jugadu and cost-centric, right? So there's one company, Zen Technology, we discussed. They have made a robotic dog, which can detect mines.
Indian companies doing this.
Indian company. You don't have to send your forces to Naxalite areas. You can first send a dog.
Mechanical robots.
They make simulators, how to give training to tanks and all. It's one company which has got 16 patents in last 15 years. It's India's best IP company right now.
And they have a lot of scientists, I'm assuming.
A lot of R&D.
So, can you tell me about what the future of India will look like, considering what has already happened in the West? Like something which has already happened in the West, India, it has not even begun, but it is definitely going to happen in India very soon.
So one we discussed, which is financialization and equity culture. I think this will pick up. So any bank which becomes a fintech, which can really migrate, I think has a huge opportunity in really shaking this up. Right. So wealth management, and the other best part about wealth management is very low capital intensive, very asset light. SDFC mutual fund started mutual fund with 25 crore authorized capital. Now it makes 300 crores profit every quarter. So this is a business where you don't have to invest anything. Once you put the amount, the money keeps making. This is infinite ROE.
Correct, because the amount will keep increasing. The AUMs will keep increasing.
You don't need to put a plant. You don't need to procure raw material. You don't need to put a machinery and all. It's a people.
Yeah, it's just a research team. That's your business.
Yeah, so I think, that's our business. So asset management, wealth management, depositories, I think will become as big as we will have our, own. China has 3 banks which are $3 trillion. Our largest bank is SBI, which is, I think, $400 billion. So 400 and 3 trillion, the gap is like. So we will have at least a dozen HDFC, ICICI, SBIs of the world, which will get to 1 trillion. So private sector banks is an opportunity. So we'll get there. Second, I think tech. I think our tech representation is only 14-15%. It has to be higher. The world is there. And I think more and more manufacturing. I think every bull market has a new leader. In 90s, it was cement, steel. Then it was tech, .com bubble happened. 2007 was all infra. Then Lehman crisis happened. After that, the banks and the Bajaj Finance came.
Right.
2016 was the new tech like Netflix and Amazon's, the commerce of the world. I think this decade should be manufacturing.
And then clean energy as well.
Clean energy, yes.
Fantastic, Gurmeet. I think on that note, let us slowly simmer down and bring an end to this conversation. I think every minute was value packed. I think your almost 20 years of experience in the market, I think I was only able to take an iota of it. Thank you so much for spending almost 2 hours with us. I think it'll be very easy for the team to edit this, because there's nothing much that we can remove. Every single minute was knowledgeable, and anybody who watches this is going to just have their mind open up into the world of stock market, and anybody who watches this fully is going to be an informed investor for life. So thank you so much for giving us your time.
Thank you for having me, sir.
Thank you.
Thank you so much.
Thank you guys. And I'll see you in the next one.